Okay, recap for Wednesday, the 5th of November, 2025. Okay, I can't lie. This should have been clean. And yes, for sure, I'm implementing AMDX X AMD into the trading, right? This is just saying that the days will either, how the weeks would start is accumulation, manipulation, and then the next day will be distribution. And then after that, it will be X, which is reversal or continuation, right? And then Friday does what? Friday does TGIF or depending on what we did. So now that this actually helps so much with guessing what the weekly profile is, right? Because that was my only issue I think left. And then after that, now once I can correctly decide what to look for, then I'm gonna look for one thing and one thing only, right? And now this builds up on the idea of finding the manipulation. Okay, so manipulation will always go into a higher time frame PD array. That's always the manipulation. If, right, if I can't find it on NQ, I need to find it on ES, right? And then based on that, on what liquidity is left, if it's London, Asia, how did we move, blah blah blah, then all the other concepts of just understanding how the market moves aligns with it, right? So we understood we're in a market make or buy model, right? We understood that Monday did the accumulation, Tuesday proceeded with the whole manipulation down lower. So Wednesday we're expecting our distribution, which means we need to make the low today, right? So we have a low at Asia and we're all the way up here at 9:30, right? There's rules to this shit and I already have like so much, right? And this is just running up in so many days, right? And just explaining why this would be the low of the day and why we're going to go up higher, right? And like, for example, why won't we sweep it? Manipulation goes to a PD array to the tick, right? Just need to remember that. Like especially that the one outside like this, it will go to a PD array to the tick, right? So you need to find on the day, and it doesn't have to be like, for example, if this was previous day, then I wouldn't know until I see what happens, like for example to here. Once we get that confirmation, it has to be to the tick or around it, or like, you know what I'm saying, but like it has to be like there, you know what I'm saying? You're like, yep, it went to that price level. So I'm allowing 3, 4 ticks max, right? So one handle of just messing up, right? If price wants to overshoot it, that's my maximum. If it's over a handle, then I don't trust it. Okay, so now we understand that first rule, and let's start. Let's start right here, right? Let's start 3 9 30 because that's when the whole analysis should be done. You already know what price should be doing by then. First of all, you want to see did manipulation happen already, right? That means do we have the low of the day intact? The days that I'd love to be low of the day would be London when London sweeps Asia low. But as we can see, London low is right here and it gets swept after London by, I guess, London lunch or whatever, right? So, and then we go back up. So if we're going to distribute up, is it likely that once we open here, we'll go all the way down and then go back up? You know what? It could happen. It literally could have happened. But what's the reason that it didn't? The reason that it didn't because we already have manipulated. Let me show you why. Right? So let me drag my PD array chart. The PD array chart is notable PD arrays that price should react to within our level. And first, let's understand our 20-day look back, right? Oh, let me not use this chart because it's going to be a bunch of backtesting stuff on it. So let's drag this one. Let's go back to the PD array chart. If we use the daily, and then we'll count 20 days back. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Highest high, lowest low, right? We expect price to go to discount in that range, okay? So at that level, I'm looking, right? This is the low of the whatever, right? I'm looking for price to go to discount, and then the PD arrays next to discount are the ones that I'm interested in. Just like how ICT teaches in his, like, I think last two, whatever, right? This is what the market is looking at. Then you could have the 40 and the 60 look back, but I think that's just different. Like, let's say, for example, throughout this whole time, we kept expanding through the 20 days. Then we're doing the 40 look back, but so we start with the 20, 40, 60. Now, I'm pretty sure just because we haven't reached discount throughout that whole range, throughout that whole time, now we're going to discount to go up higher. Now, watch this price level. So let's see, right? As you can see, we miss it. We miss it slightly. However, what's the PD array at discount, right? We have this series of order block. We have the opening price up there, right here, and which is the lowest down close candle of it, the most sensitive. And on top of that, we have, or more accurately, a volume imbalance, just sneakily hiding there, right? Sneakily hiding there. What is the low of it? I know it doesn't seem like it hits it, but because it's one pixel. Wait. That's why you look up price levels, right? 28200. What's the low? I'm zoomed in too much, that's why, by the way. Like, if I, have it like this, it's the same low, right? If you look up, it's the same exact low, right? So the upper quadrant, it said, you know what? That's it. That's enough discount, right? It think it. Discount is here. Come on, bro. I'm not going a tick or two below. I mean, two handles or whatever to get to discount. I'm that bullish, right? Upper quadrant, we're bullish, okay? That is your sign for the manipulation for the day is done. You could just from then, whenever you've seen that, is buy price and just put the stop loss at the low for that day, right? Because it will never be reached for that day. Right? I'm not saying it will not be reached for that day, okay? So now we know where our manipulation is. It was done at Asia. Now we're looking at price to reach discount from there, right? Price goes and have a swing, goes up to here, and does reach discount. So let's go back to the trading chart. All right, now we understand that price went and reached discount. That puts it into another range, right? This discount has to have its own PD array again, right? That tells us, and it works from the lower PD array, right? So now we'll go back to this PD chart. As we can see, where's the bodies closing, right? What is price doing right there? What's this midpoint? 5 minute, right? 5 minute is how I check PD array closer, right? On the lower time frame, it could be well below it, right? One body below it. That's a mohawk to me, right? That means what? The 3 minute doesn't do it. Yeah. See, like but this PD array is the 4 hour, right? Through this range, we have a 4 hour fair value gap, a prominent big fair value gap, right? Look at the bodies even on the 4 hour. What does that say? Right? We're staying on the upper half, upper quadrant, upper half. We're bullish as fuck, right? Manipulation has been done. And remember where this was? Remember where discount was? Right? Let's draw that shit. Let's draw it again, right? For just the purpose. Right? Discount is right there. So we have discount and we hit the PD array. See, this is different because none of these are the trades, right? The trades will only happen at discount, liquidity, and PD array. Here we hit discount. we don't even hit discount. We hit the PD array. That's basically the discount one, right? That's the manipulation. To us to enter long, we're trying to enter on a continuation. I mean, for this model specifically that I'm talking about right now, is us to enter on a continuation. And it consists of going to discount, then liquidity, then PD array. Okay. At that time, we don't have liquidity here, right? No, when I'm referring to liquidity, I'm talking to liquidity. So Asia, London, blah blah blah. You know what I'm saying? London's all the way up here. It's not a discount. So that would not be an entry, and that's outside time. That's at 6, but it's telling you the narrative, right? Now this says that the next one we have range 3, right? This range is sus. However, if price is really bullish, then it goes into more of a macro range, right? So I always use the daily and the 4-hour to find the manipulation, but I've found in a lot of times, wait, some days I'm missing them. And why? Because then price goes into even a lower PD array, and that once we have one to the tick, the highest one, the next ones don't have to be to the tick, but they have to be respecting that PD array, right? So now we have entered 930. Now we're looking at discount liquidity PD array. Okay. The 1 hour time frame, if you're looking for a 1 hour time frame PD array, it can be any liquidity. If you're looking at a 4 hour PD array, and a daily, it has to be session liquidity, right? So yeah, there's rules to this shit, bro. There's rules. I'm telling you, anything that I'm saying, you can run it and backtest it any fucking day of the week. You'll see that what I'm saying is correct. And I'm just talking to myself basically, so I can reinstill the importance of this idea. Now we understand this, and now we understand this is potentially, see, that's what I'm saying. Why is it potentially? Because the PD array, hold up a second, did I mess up the, hold up, so I don't have to chat absolute BS. What's the low? 25,403. The low here, 25,404. I missed by one handle, right? One handle misses that low. So because it's not hit to the tick, right? And nobody's are closing. I know what this is telling me, but I can't tell you this is a guaranteed protected low. However, it could be the swing low. See, that's why you need to work on the probabilities and see what the hell is going on. So now back to the trading chart. Range 1, we know that it went to discount, and because it went to discount and took the liquidity and respected the PD array, now that is for sure range 1. Range 2 is what's offered to us right now in price, right? So within this range from high to low, this is discount. And remember, what's our time frame for the PD array is the 1 hour. So what do we have in this discount? I mean, we have a 1 hour PD array, and then put it like this, so we can actually see lower there, and then let's put the quadrants of it on top, right? So we can see it visually there, right? So remember, green is discount and the rest are the quadrants. And let's put it into so it doesn't blind my eyes. All right, now we have discount, and then what are we looking for? Liquidity. Okay, this one's a bit sneaky because if look at all this liquidity, and right there, and God, that one went that slightly, because other than that, I will just nullify the trade, and that one goes slightly under it there, just perfectly under discount by 1 tick. Boom, that's the lowest low of that liquidity. Boom, put it there, discount liquidity, right? And that's not initial liquidity, because initial liquidity is all the way down here. I could expect, for example, on here, right? And if you look at that low, 750, right? 750, we make an SMT, right? That's all I care about. I'm looking for an SMT. It could have went all the way here to an SMT, It wouldn't make sense, would it? On NQ, on ES, I don't care, but on NQ, if we're really that bullish, where do we go to? The lower quadrant of the hourly fair value gap, right? And right there, if you just look at any other time frame, you can see that the bodies are well above it. Well above it, right? We're just wicking into it. Well above it. We don't spend time. We just say hello and we leave, right? Bodies on the 5 upper quadrant, right? 10-minute, not even, like, you know what I'm saying? But I'm talking at the 5, 4, 3, 2, 1 minute time frame, what we're using right now to trade, to get in the trade. So now, based on what ICT teaches, these PD arrays, once a PD array is on a PD array, how do I explain that? Quadrants, these new weekly opening gaps, blah blah blah. Like the little one, once it's on the big one, boom, you got your trade. So now, what makes an order block? An order block is the lowest down close candle. Up close if it's the opposite way. Anyway, down close candle that takes liquidity, right? That takes liquidity, and I've seen what's better and hits a PD array. So, does that fit? Yes. Entry at the high, stop loss below mean threshold. Okay. What makes this order block even higher probability? Where does this order block lie? Okay. At the bottom of the new weekly opening gap, right? At the bottom of the new weekly opening gap. Boom. It can't get higher probability than that. Price should hit it and not trade below the mean threshold. That's your entry, right? That is your entry. Stop loss at the mean threshold. I'm gonna just die it, right? TP is what's left on the liquidity, right? What's left on the liquidity. When you're looking at the regular trading hours, the fact that we open and we don't have an opening range gap, there's no reason for us to go lower. What's left on the liquidity? We've taken sell side, we've taken sell side, right? And I'm talking about session sell side. So we have taken London low. We have taken the PM low from yesterday, right? So that's 2 sessions sell side out. And we have, I'm not going to count the current liquidity that we just took, but then what's left? Then we have, okay, let's go back. Then we have PM buy side. And then we also will have the AM buy side right there. What's the highest probability? We know it's going there, but is it going there today? No. I mean, it could do. You don't know, right? That's what I'm saying. Don't know. And then if this is our Judah, right? This is our Judah. All we're looking for is 2 to 2.5, right? 2 to 2.5. Highest probability exit right there at 2, and you could have 2.5, and you could have 4, but remember the 4 could always take more than a day, so just get out at 2 or 2.5. I'll decide to 2, and that was the trade, right? Simple. And literally in minutes, 10 minutes from entry to what, 9:42 till 9:59, right? The shit is literally like 15 minutes. Boom, done. Stop loss doesn't even, so tight that it doesn't even matter, right? So essentially that's just the recap, right? Yes, we did not reach midnight opening price. That could have been a heavier discount, but if price is telling us we're that bullish, I don't expect it, but it could have wicked, right? I'm saying it could have wicked, but that SMT and all of what I just said there tells us the whole story, right? Once we do that, we go back up. Once we left the new daily opening gap, we should have not came back into it like that. But then boom. And how do you know we're leaving the place? How will you know we're leaving? Once we make a fair value gap through something, I've seen that that's one of the most important things to understand. How do you know we're leaving or not wicking? Once we make a fair value gap through liquidity, through PD arrays, through even I found standard deviations, right? If we make a fair value gap through it, it means we're going to the next area, right? And if for example we wicked here, right, and then closed below, I'd kill the trade right there, right? That's enough. That's enough as for the trade, right? I'd kill it because then we could want to have a deep retracement. But if you see price is just leaving open gaps, it's going, it's telling you, yo, we gotta go, bro. This is not the time for price to stay down here. As you can see, for the rest of the day, we come back down, right? Offer a little bit of retracement, not even 50% of this range because we're that bullish. And then we offer a quick another retracement that nullifies all, right? The times that if, for example, you expected price to go up and reverse, which I was like, you know what, there's a possibility why. Yes, we did SMT, but there's still, right? Actually, it took it. Yeah, I'm blind, but there's still relative equal lows, right? Even though it's SMT, it could have went up, and I'm not gonna lie, it could have went back down and then decided to have Thursday and Friday to go up, right? However, that's not something that you should be trading today because we are in the distribution phase of the week, which means we should be looking for only one direction. And what's that one direction? Longs. Anything other than that, kill it, right? Well, we already know how it's gonna go down if it's gonna go up. Let's play devil's advocate. 10-10, right? Are we near the highs? Well, I'm gonna use NQ because these times out back to NQ. For near 10-10, right? 10-7, right? I would like it more on around the 10-09 to 10-11, really, right? But that could be, but it has the 10-10 one has to just be one up and one down. I can see that we're taking the high, so that's nullifies it. Then the 10-28 to 10-32, basically 10-28, right there. Okay, we're at the high, but we slightly put a wick above it. What does that mean? Unfinished business. That's not the high. So by then, 1034, 1035, that's it. Probabilities died because we didn't take that high. Now the next one is the 1050 macro. 1050 macro. What are we doing? 1050 macro, okay. We go above the high, right? And then we'll come back down. Okay, so where's that fair value gap above, like holding the consolidation up? Right there. So then I would want price to go and close below it, right? Close below it, and because there's two, I actually want price to go close below the lower quadrant of both of them combined. So like this area, right? Because then I would want to get an entry above. Let's see, that's me playing devil's advocate, right? I would not take that short because it's still low probability. Boom. We don't respect the upper half, kill all the liquidity, and then have our phase two, which is go up, consolidate, go up, right? Go up, consolidate, go up, and then, let me just explain it at the end, right? So let's just let price play out, and as you can see, let's just put in 4 minutes or something, right, to go faster. We make relative equal highs. If we drag our deviation chart here, you can see that ES makes a higher high, which makes this go back. And I would have liked to paper trade it on a final hour micro, but it did not wait. It just used the PM 250 to start the micro to go down, right? But yeah, that's the day. It's clean as fuck. And I just need to explain that part that I said go up, consolidate, go up. The price will, I've noticed on specific days will basically be like a fractal of itself, right? Like what it done before, right? So we go up, consolidate, go up, right? This I know it's like how price behaved earlier is kind of how price behaves throughout the day, right? And if price is spamming one thing throughout the week, it will spam it till that week is done, and then I don't know. These is stuff that I know is stuff fractal, but I'm just saying like keep it up. Anyway, one more thing, right? To just follow like narrative. Let's say I'm holding for like I'm being greedy for the day, right? Not greedy. Like let's say I'm leaving a runner, right? So throughout this whole time, price was permissible to go all the way down to discount of this low to this high. So what would I want is that fair value gap, and like for example, stop loss would be at that low, right? But no, it's how we go all the way back to thingy, right? So is that smart? No, it's actually pretty stupid. So might as well just kill your trade at a plausible place. And then if you're looking for a re-entry later on, at once all the stuff to go down said no, could go up there. I guess breaker. I guess fair value gap inside a breaker. Bro, that it didn't even. It said it peaked for a second and then gone. Right. Um, if you missed it in case, or if you want to re-enter with the probabilities again on your side, there you go. But again, chasing, no point. Right. Take that long. Bye bye. Done. All I want to say, if you want to know if you're still on side, once price goes up, right, to the upper quadrant of the new weekly opening gap, it comes and touches the midpoint. That is your confirmation that whatever you do, stop loss is at this low and price should not reach it, right? So this, because now it went to the PD array, it makes the new range, right? Just like I explained earlier, because now that range is done because we got our new range. And then if you come back at it again, discount and liquidity, I'm guessing, well, you can't really see it properly, right? Because like we're getting lower and lower time frame basically. So like let's say that I went from the hour, right? And we do have this liquidity and this liquidity that includes. If these didn't include with it, then I wouldn't say that's a trade. And then I'm guessing now, because we've already used the 1 hour, what's left, I guess a 15-hour PD, 15-minute PD array, right? And what was discount? Was it that low? I think it was that low something. I mean, I have a bullish order block. I've never dove down less than an hour, but I'm just trying to see if it makes sense. Maybe 1 hour to then even 1 minute now, If that's how sharp we're gonna do it. But regardless, find the PD array, which in terms we can see is a 2 minute gap, right? From just the 1 minute, 2 minute gap, basically. Or real gap, if you like really just doing the gap, is you can see is from here to here, right? Like this is the gap. And if we're gonna filter it even down to really what the gap is right there, right? This was left as inefficient, and you want price to be on the upper half, right? But yeah, this is just getting too deep for no reason. Anyway, see the same thing, right? Once you identify the range, and the range is going to be told by the PD array, and because we manipulate into a PD array, make a new range. So, and then you'd want to catch the discount, the continuation. We manipulate into a PD array, right? Make a new range, right? And you'd want to catch the discount. Here, it doesn't offer it. That's fine. However, it's going to offer a new one, right? Here, right there, manipulate into a PD array, right? Discount, and then there's liquidity. However, why does this one not offer it? Where is the liquidity? We don't really have liquidity like that, We have gaps, but here we have liquidity, so it offers it. And here we have liquidity, so it offers it. Even though we don't really have it on that discount, I'm not sure what's discount here. I mean, if that low's there, then it's gonna count, right? So let's get accurate with it, right? So we don't have to yap about bullshit. And That's the highest high, right? Nope, it just goes to discount, so I'm not gonna count it. But as long as it went to discount, that constitute not to buy it, buying it here, not really, but to see if the next range offers it. Anyway, it seems like I'm making it more complicated than it should, but it really ain't, because you really need to understand all the different elements to it so you don't get cooked, right? If you really, really understand this, bro, this shit makes trading so easy. So anyway, the best addition, low key, I think, AMD X to the narrative, because then you would not be looking for shorts and longs, and that's what cluttered my charts. Is okay, I'm looking for shorts, but then I'm maybe looking for longs, then I may be looking for this, and then maybe looking for that. Mess. I think I found, honestly, every addition or every like adjustment I'm making to the model, or the models, or understanding what price is really doing, is benefiting way too hard, right? And now I feel like I'm confident to be able to know what it should do and what direction I should focus on the day, and only that for the day. And now this adds to me fixing the only two things left for me to be consistently profitable. Number one, stick to the narrative. Now I understand what the narrative should be, and I'll only follow the AMDX AXMD. So now I know that I'm looking for one thing only, and that's catching the distribution. I do not care about all the manipulation sometimes if it's so obvious, you know what I'm saying? But I'm only looking to catch one of them, right? And I'm only going to focus, like, for example, if the manipulation already happened, then I'm only looking at distribution. I'm not looking to catch another manipulation. However, that's why I said not every time, because sometimes the manipulation hasn't happened, and the 930 could be the fast manipulation. I like to just enter the trades that are fast rather than the long winded distribution sometimes, right? So if manipulation didn't happen, enter the manipulation. If manipulation happened, then enter distribution and only look for that one side. Now that I know what to even focus for, it's less likely for me to get faked. Number two, my entries. My entries used to be wishy-washy, whatever, right? CSD this day, order block the other day, maybe fair value gap this day, whatever, right? However, I do not know all the stop loss rules for all of them, like, to a high probability. So now I know fair value gaps. I know where it shouldn't go, but sometimes it's a bit weird, because then there's two fair value gaps, because then you have to allow for the next fair value gap. But is it a liquidity void? If it's a liquidity void, then don't think about the fair value gap. It's all gonna go close all of them and basically go to an order. So there's a bit of a mess. So now I'm gonna limit it to a fair value gap that I know where the stop loss should be, or order block, or break a block, right? So order block, break a block, fair value gap is probably the only PD arrays that I'm going to use to enter price for the moment, until I advance more and more and know where my stop loss management. So me sticking with this idea reduces my risks significantly, right? And I'm only on limit orders, so if I don't get that price, GG, go next. So now fixing that, now there's one element to combine all of this, and that's patience, right? Today, for the first time, right? For the first time, I've waited more than like 2 hours before entering a trade, right? The first time I sat in front of a chart and said, I don't like anything. I missed this trade, right? I missed this trade on my actual account, because I did it on paper here and like a market entry, but I actually missed it when I was trying to do it on the thingy, because the monitor was bugging out. And once it left, and I didn't like the risk. I waited the whole time, I think, for this one, right? Just to get to the high and just left. Because I already missed it, right? And I'm just trying to catch the whatever, right? And even catching the whatever should have not been a thing, but I like how I waited, right? And that is so good, right? Now that I understand what I need to do, I can actually wait, because back then I didn't know what time is it gonna go. What needs to happen before it's gonna go, and I'm just there like, yeah, I can't miss the trade. I can't miss the trade, but I need to make money today, and all this. Like, that was what's messing me up. Now that I'm improving on being looking for one direction with the implementation of AMDX X AMD. The second thing is knowing the time to enter, and that's only gonna be around or in the macros or the opening range, right? So that's two. And then the third thing is just patience. Is wait for price, right? Price once it hits these PD array in time, right? In time. And this time is the opening range. Beautiful goes. Yesterday, the distribution is bearish. However, the manipulation didn't happen, and you have the same order block entry to the 0.5. Once discount is reached, that's it. You close the trade. However, if you didn't catch that and you want the distribution, which is short, 1050, right? The same gap is right here. That offers you an entry into the, well, it's not an inversion, it's a suspension block, but regardless, it is what it is, right? It offers you an entry into it at time 1050. After all the mess, here's your entry 1050 to start the distribution that follows all the way down to the 0.5 of that range down here, right? Beautiful. I mean, what more do you want than that? It's simple. So if we have the idea, if, oh, we're already bearish, I have not missed anything, I'm just waiting and waiting and waiting and waiting. And because I know what this looks like, this is the consolidation before the Dumperoonie. It's simple as that, right? Because that's where the liquidity left, and you would not take it all the way there because that's absolutely stupid. You're going to take it to the relative equal lows, right? Goes there, goes back, and then start meandering lower. That's all you need done, right? That's all you need done. So I know my stop loss for this suspension block entry, for example. I know my stop loss for this fair value gap entry. Breaker block entry right here. I know my stop loss for this order block right here, right? So now I need to understand that. Wait for the stupid PD array to enter on and know its stop loss, right? Because at one point for like the past, that's not 1 point, for the past 3 months, I'm just market entering, and that fucked up my risk to reward so much, because I'd be like, okay, boom, hit that shit, and then I swear to God, it'll always meet into the highest point, the lowest point, or some BS like that, right? Now, I'm getting serious with it. It's cool. Alright, now that we understand that we made relative equal highs, what are we looking for tomorrow? Tomorrow, I'm looking for X. Now, that I'm going to be strictly using AMDX to get the weekly profile, because it's proven to me while observing it time and time again that it's actually got a lot of validity to it, right? And I like the just how it makes it simple. It simplifies it. So now, if we get discount of our range, right? And our range, we're not gonna know that until tomorrow. Yes, you could say this range, but no. It will be done based on what we do at Asia and London for New York range, not for the whole day. You could catch an Asia, probably it could be Asia low, it could be London low, right? It could be whatever, right? To target these highs, and ultimately these highs. Could it get to all of them tomorrow? I mean, it could. I'm not saying it couldn't, but I know at least up to there, right? And that will be my TP if we keep these highs intact. Why is it up to there? Because then we're entering a daily bearish fair value gap, and that doesn't mean we're not gonna get to the highs, right? But that means we might want to slow down, right, and come back slightly down, because and then we'll see what Friday does, and then complete this market maker buy model next week. Right? That's a possibility. So why the hell would I hold for longer? So I would want price to, if we're looking at the 4 hour maybe, right, and we're making a fair value gap down there, right? See that all the way down here. See daily opening gap. That's a nice fair value gap to come all the way back down to at Asia or London. Am I right? You know, could do that, right? And offer I feel like it goes back to the one of the reaccumulation phases, right? I don't know. It could do whatever. I'm not here to predict what exactly the market is gonna do, but all I know, I'm gonna be longs for tomorrow, looking for this buy side. This buy side is reach, and it's questionable. Then it's actually questionable if I'm even gonna trade it, right? Unless I see something really clear to go to these or these, then I'm not gonna touch it. And yeah, that's the market recap. I know I'm making them longer, right? I'm talking to myself here that I'm making them longer because I do intend to watch here and there, and I know in my notes what am I talking about. And then if let's say I'm messing up on something, I can go back and see how I was doing it and get back on track, because that actually helped me a lot. And that's why I'm making these more and more in depth, so I can spit every thought that came out throughout the day and why shit happened. And that just kind of reminds me, even when I'm like, okay, while I'm trading, while I'm doing this or that, I remember what I thought of, and I remember how I thought of it, and I remember when it worked, and I remember when it didn't work. So once I slap all this information, spit it the fuck out of here, we Gucci. But yeah, that's the market recap. Simple order block entry, right? The perfect one for the day. But I missed it because I need to wake up. I need to wake up earlier for sure. But yeah, looking for one direction because AMDX accumulation here, manipulation on Tuesday, distribution on Wednesday, and that is normally Wednesday will be, in my opinion, when I'm like looking at it, Wednesday will have a very nice large expansion, right? So if, and I have a rule actually, like I have a strict profit target for each day, but for Wednesday I said you can have it to whatever you want, because normally Wednesday would be the expansion, and normally that makes sense because it's the distribution day, right? So accumulation, manipulate. If we have AMDX, which means Wednesday will actually expand a lot because it's distribution. It's the start of distribution, and then the second day, if we still didn't take the high, I'm looking for another set of distribution on Thursday. Beautiful, beautiful, beautiful. And this is ICT market profile for Tuesday, low of the week, right? Tuesday, low of the week. So for the daily. Wait, did I say Tuesday? I meant Wednesday, low of the week. What am I talking about? Right? Wednesday, low of the week. And this one's different to the one that has news, right? And as you can see. Anyway, enough yapping. Peace out.